What up, Hyperchange? Welcome to another episode. Today we're going to be talking about Snapchat. The stock is soaring up about 25% to almost $9 per share as I'm making this episode on the back of a breakout earnings report. Earnings were reported yesterday and the conference call happened. Just checked it out, so we're going to go through the numbers and see what investors are so excited about. The most important thing that I look at for Snap every quarter is daily active users. On average, how many people are logging into the app every single day during the quarter. The biggest thing that investors are so excited about is we saw stabilization. In Q1 2018, they peaked at 191 million. We had 2 quarters of sequential declines in Snap's user base, but now that it's stabilized to 186 million, Snapchat is no longer shrinking, and this is what investors are stoked about. And if we take a look at the year-over-year growth rate in daily active users, we actually are shrinking year-over-year. The user base is at 187 million in Q4 2017, now at 186 million DAUs. So year-over-year, the user base is shrinking about 1%, but hopefully that can reverse going forward. Snapchat's decline, almost 100% impacted by Facebook and Instagram replicating the Stories product in Q3 2016, and ever since that happened, it's just sucked the wind out of Snapchat's growth. And that's user-based growth. If we look at the revenue growth rate of Snapchat, it was able to grow 36% this quarter, which is, a solid growth rate for a normal company. But if you look over time, the deceleration in Snapchat's growth rate is so apparent. If we zoom in to just the last 4 quarters, you can see how Snapchat is, its growth rate has gotten cut in half from 72% to 36%. Moving to the actually quarterly results, we saw Snapchat post revenue of 390 million and a loss of 195 million. So the company is still bleeding money, but a lot less than it was. And there you go. Once again, you can see that growth rate deceleration that we've seen, pretty dramatic. But the biggest thing to look at here is a huge improvement in Snapchat's operating income. And so they lost 361 million in Q4 2017, down to only 195 million in Q4 2018. And so Snapchat has made a ton of restructuring moves in 2018. Every single line item of their OpEx, SG&A, R&D, and sales and marketing decreased year over year in Q4. So Snapchat, despite growing its revenue 36%, has been able to decrease its operating costs, and this is leading to huge leverage and huge strides, frankly, way above my expectations, where Snap, even though its growth has been shrinking, it's making impressive progress towards becoming profitable. And if we take a look at the gross margin of the company, I think this is very, very interesting. You can see that Snapchat finally, after being very weak gross margins for the company throughout 2016, 2017, is showing a clear uptrend in gross margins to hitting a record of 45% in Q4 2018, up more than 1,000 basis points year over year. So this is the most important chart to watch for Snap. Twitter, Facebook, Google, all these other advertising social network companies are posting 70, 80% gross margins, and that is the reason why they're incredibly profitable, and that is the foundation of the unit economics of their business. Snapchat just hasn't shown that characteristic up until now. Gross margins have been in the 30%, but to see them make this continued big leap forward to 45% is very promising, and this is a trend that, according to management on the conference call, sounds like will continue going forward. Financials on an annual basis, this is what you can see. I adjusted to 2017 GAAP numbers for the IPO expenses to try and normalize it, and you can see, Snapchat was able to shrink its loss this year and grow revenue, so I guess solid progress. But if we look at the growth rate over time, this has gone from a company in just a couple years that was growing absurdly quickly to now just like a very normalized plain 43% growth rate, and in my estimates slowing down to a 27% growth rate in 2019. We'll see if they can keep this up. They're growing 36% in Q4, so but that's what I have for my estimate for now. And in terms of earnings or operating income, I'm expecting a huge improvement in 2019 to a loss of just 500 million. And, Snap only lost 195 million in Q4. I think they're going to continue to improve their losses. There was a leaked memo from Evan Spiegel that said the company actually wants to hit profitability in 2019. I'm not sure if that's GAAP or non-GAAP, but Snap is making a huge push in towards stopping to bleed money. And I think that is going to be the big trend of 2019, less about revenue growth, but more about huge improvements in the operating loss. And just lastly, I think it's important to look at Snapchat's cash position, because they raised a huge, $2 billion plus when they IPO'd in early 2017. And that cash position, they've been burning through it, but at a very, slowing pace. And so now Snapchat's cash position was down just like 130 million quarter over quarter. They still have, 1.3 billion in the bank. So Snapchat's still very healthy position cash-wise, especially given the fact of how little money they're burning. It looks like they have enough money to last them easily through 2019, even if they want to do some sort of pretty large several $100 million acquisition. So Snap is actually in pretty, healthy financial shape in terms of actually money in the bank. And if we go to the valuation of Snapchat based on a fully diluted 1.6 billion shares, $8.75 a share, we're looking at about a $14 billion market cap, divided by my estimate for 1.5 billion in sales, 9.3 times price sales. Those are the numbers that Snapchat reported in Q4. I think it makes a lot of sense to me that people are super excited about these results because, it's just fundamentally Snapchat is no longer shrinking. They've been improving their operating loss. And I mean, the stock was down from like 20 or 30 bucks at the time of an IPO just a couple of years ago to down to like $6 per share before they reported these earnings. So the stock was way down there in the basement. So I think part of this is just, a bounce because it was so low. I mean, we're still trading at $8 or $9 a share, still way below the IPO price. And so, I think Snapchat is in a very interesting point. The tone on the conference call, Evan Spiegel didn't seem too excited. I don't get the vibe that there's a huge breakthrough innovation to really reinvigorate user growth or earnings growth for Snap. I mean, they're excited about this original content, premium original shows. I have some notes from the conference call where they mentioned that this NBC show called Stay Tuned is getting 25 to 35 million Snapchatters watching it. And they also announced that NBC noticed that 2/3 of those 25 to 35 million viewers were new viewers. So, there's a lot of legacy content companies and different content startups partnering with Snapchat to build premium content. And that sounds like an exciting growth avenue for the company. But I don't know. I just don't get the vibe. There's a huge innovation here. Yeah, they are making progress towards profitability, but a 9 times price sales ratio for a company that's struggling to make money just seems very, very expensive. So on one hand, I think Snap, just based on its financials and based on its near-term growth trajectory, doesn't look that exciting, at least from my perspective. The other side of that, though, is $14 billion for a company that has 186 million people engaging every day, seems like a very low price. Facebook is worth, over like $500 billion in market value, and they have, 1.2 billion DAUs on their platform or somewhere around there, 1.4 billion DAUs. So, Snapchat, if you were to price its user base, who on average is spending more than 30 minutes in the app relative to some of these larger social media companies, I think it could be greatly undervalued. So if Snapchat can continue to figure out a way to hang in there and reinvigorate growth in their user base, I think this has huge potential. I mean, I'm a fan of Evan Spiegel. I think he's a visionary. There's been a lot of executive departures at Snap, which do worry me. Like they hired this really impressive CFO from Amazon, but then he just left after a short period of time. So that's never good. I do think Snap has a chance. And I think that was the biggest takeaway from this earnings report is Snap is, they're not dying. They're stabilizing. They're still here. They have plenty of cash, $1 billion plus in the balance sheet. They're here to fight another day. And the last thing the CFO said on the conference call before opening up to the Q&A was the most important thing, in my opinion, which is that DAUs, they're cautiously optimistic to be flat or maybe even grow a little in Q1. So if Snapchat, I think, can go back to returning to grow its user base overall, that would be huge. And they've also been touting this big Android refresh for years and years, or like forever, it seems like, and that never has come out. But Evan Spiegel does note on the conference call, there's 2 billion Android users who are not on Snapchat. And once they refresh this, revamped Android application to make it much easier for Snapchat users, they could see, significant user growth from that. So anyway, that wraps it up. Please let me know what you think in the comments below about Snapchat's future. Are you excited? Do you believe? Is it just one little pop before it continues to decline? Let me know. Huge shout out to our Patreon supporters, producers, funding Hyperchange. Thank you so much. I'll see you guys next time. Peace.